Doing good. Doing good.
I fit your sunglasses. I'm gonna fit some.
So,
Here.
looks like we have wrapped up the day here. And
That's not the right way.
They're okay.
There's a person in bathroom.
if y'all wouldn't mind, unless you have a specific question for me or would like to ask something in the interim, just keep the mics muted. Otherwise, I would like to encourage y'all to interact. This is a great opportunity for many of you to ask questions after you've gotten to use the C3 indicator to get a very direct answer as to, certain aspects that you might want clarification on, or things that you might not otherwise be able to ask. So wait just another minute here and let some of the others come in. I still see a few people coming in here. Just curious, are there any charts that y'all would like to take a look at today? You bet. Absolutely. All right, so I'm about to go ahead and get underway here. For those of you who weren't at last Friday's session, I would like to just go ahead and take a second and introduce myself. I am Christopher, also known as Christopher84, and today we're going to be going over the C3 indicator. It's certainly a privilege to be here, and I am looking forward to a very, very good discussion. For those of y'all who weren't here last week, I can go ahead and go over some of the basics of the indicator first, if y'all would prefer. We can start out that way, or we can start out with just questions. I'm also open to doing that. Would just kind of have a show here. Would anybody like me to just kind of start from scratch and talk about the indicator itself? Or would y'all like to just get into questions that you have about the indicator? All right, fair enough. Okay, so I'll go ahead and do a screen share and we'll get this thing underway. So right here, we're looking at just a 10-minute chart of the E-mini S&P. And for the moment, we'll just kind of bring the focus into the C3. And where I like to start on this is the candles themselves. And I like going through this process because I think it helps people to understand how the various components came about and why I designed it the way that I have. So the candles, they started basically as frustration on my part. I was using multiple indicators just all the time, and I was looking for a consensus as to where the trend was going, whether it be up or down or whatever. I wanted agreement among my indicators, and inevitably over time and as I traded, I kept trying to use more and more indicators to give me that sense of comfort that I was in a trade that I should be in, verified by all umpteen of my indicators. And what would happen is inevitably I'd spend all my time looking at the indicators, trying to get the agreement, and the move would pass, or I would talk myself out of something that was actually fairly clearly defined. I just couldn't see it. And so I started out, and I started with the confirmation candles, and several of y'all are familiar with confirmation candles. That they're excellent in their own right, but when I designed those, I was looking for uptrends, and so I was only considering the factors within the various studies and indicators that signified upward movement in price. So when I did that, of course, I had the confirmation factor, which was the threshold of agreement between the studies that I had to have to say, well, looks like price is going to be going up. And I saw that that was actually working pretty decently, but the more I thought about it, it really just wasn't a very balanced approach to determining where the trend was. I wasn't considering that maybe another indicator isn't calling it up. Maybe multiple indicators are calling it down as well. So it started venturing into the territory of more of a balance, and something that lent itself more to a histogram style of analysis. And I found that as I got into this C3 candles, is that it did have a more balanced approach to looking at trend. It had substantial noise reduction, and thanks to a lot of effort, we were able to get it to where it was even really functional on 1 minute charts, which is something I personally am very proud of. It's not easy to get trend noise out of a 1 minute chart. However, that was kind of where I got into the consensus candles. And so it's balancing studies and what they are saying is happening in trend. So if more studies are saying that it's going up than say they're going down, then it will be an uptrend, and the opposite is also true. I'm going to go ahead and pause right there. Does everybody understand kind of the process of how the candles are working? Okay. All right. So basically, it's a fancy trend calculator. Now, the candles themselves, and I'll go ahead and do this so it's easier to see when I remove some of this. I think you'll start to see why this happens. Let's see. Okay. Okay, so here when it turned green, and then try and ride the trend out every time it turned green. But what happens here? This was no good. I'd get a green candle. I have an oversold zone, and I have a green candle. And gosh, after this big climb, I thought for sure this would be a breakout, that this would be going up. But it didn't, and it goes down. And inevitably, if you entered the trade here, you got stopped out. You either lost or you were lucky if you came out even. Then you get down here and you see a nice string, boom, 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 and you're looking, oh, okay, well, yeah, this looks like a nice roll, but there again, it gets knocked back down. So here I am looking at this thinking, well, all these indicators are telling me that the candles are going this way or going that way, but it still wasn't working the way that you would want to have like some sort of confidence. And I was trying to figure out what the missing piece was in determining where the trend was going because, gosh, this seems like a really good start, right? Well, I was missing a key factor. The candles themselves are really telling you what I would consider to be the near-term trend. And that is fantastic for keeping you in a trend, especially when you have agreement among the indicators. But it doesn't really necessarily tell you that you want to open a long position or sell a short position. It doesn't say that. So what is it that was missing? Well, that's when it occurred to me is that I'm only identifying the near-term trend. And with that being the case, I had to try and figure out a reasonable way of indicating the intermediate trend. What would that be? What would that look like? So that's when I came up with the idea of incorporating the channels that y'all are used to seeing with the C3. And all of a sudden, it becomes kind of one of those aha moments where you can see the price action in context of the intermediate trend and not just a fleeting moment of, oh, well, the candle's green, so this is a good time to jump in. So we want to look for the body, the meat. You want to get into the move where you have a high statistical probability of doing well, making money on your trade. So whenever you get positions like this and you get a head fake, that was because you didn't understand the intermediate trend. And I'm guilty of that too. Most new traders, when they get in, they do this all the time. They see bullish, they see an elevator down, and then when it pops back up, they think, this is my buying opportunity. And that's whenever you end up providing liquidity to the market because it's going to go away from you and you're going to lose. And it's unfortunate, and it's just the nature of building your understanding of trading. And so whenever you have a green channel, this is indicating a bullish trend environment. And whenever you see this, most people would be thinking, I don't need to be anywhere near this. This thing's about to drop. I'm in trouble here. This is actually bullish price action. And especially once you bust past this little indecision here, it gets even better. I mean, this is a solid green channel. The entry point here for those of you who are more aggressive, which there's nothing wrong with being more aggressive, everybody has different risk tolerance, would be this. And why is that? Well, this is a bullish candle right here for sure, bullish engulfing candle. But you see what happens to the trend? It goes into basically a moment of indecision. It broke the red, okay? So this broke up enough to buck the top of the channel and start turning the trend. This would be an interesting entry point, potentially even here. I wouldn't do that myself. But for those of you that are interested in a more aggressive point of entry, this one poses an interesting prospect because of seeing this cloud. I know that it's oversold, and I will be looking for the reversal soon because not only was it oversold, the cloud closed, and that usually is an indication you see flattening out in the channel. It's going to be reversing soon. So when you see that, you see this big bullish engulfing candle and the indecision in the trend environment. That's telling you that it's probably shifting here. So back to this point, most people, they see this, they think, oh, this move's over. I'm out of this. It's no good. It's bouncing around in here. This section is kind of ugly, frankly. But that's okay. it's basically consolidating. It broke through the channel. It's rattling around here. And this was one of the more interesting buy opportunities. It might have shaken a lot of people out here. And I would give you that with the red. But whenever you get to this point, this is 100% your buy opportunity. This is where I would suggest the majority of you look to get into a move. You have red in a green channel, strong green channel, and you have a squeeze in play. So this screams buy me. Think of it as a sell. Like if you're out shopping and somebody says, hey, I'm 20% off, you're probably going to go look to go get it if you're interested in that product, right? Well, this is the same thing. This is screaming sell. So I would be looking to buy into this position right here because of how near you are to a support level and basically the bullish price action that you've had leading into this. It's a build and it's squeezing out and up. So right here is where those of you that are looking to grab basically the meat of the move and not be as aggressive, this is your point to buy in. I would say this would have been a reasonable point to buy into. A little scarier, but still manageable. And you can see that's really typical for the price action. You see a situation here, it's the same. It bucks the top of the trend, comes back down, and then continues going.
Okay.
So you're looking for these red candles and green channels toward the start of a move. You see here, pardon me, I'm not sure whose mic's on, but unless you have a question, if you wouldn't mind to mute it in the interim, I'd really appreciate it. Anyhow, the price action, this happens over and over and over again. And the higher the time frame you're in, usually the less indecision you will see in these channels. It'll hold for longer periods of time. Looking at multiple time frames with the channels is extremely useful. But these candles and green channels are fantastic. They give insight to what the play is. Now, the play that would have been hard on most new traders, including myself, when I started, I probably would have looked to buy something like this, which is the wrong time to buy. This is a red channel with a green candle, nearing resistance. Resistance is coming down, and this is not a very attractive looking zone. Matter of fact, if you were looking to sell, if you played a mean reversion, if you thought to buy here and you were aggressive enough to try that, this candle right here is not the candle that you should be looking to, obviously to buy. You should be looking to sell this candle. This is a green candle in a red channel. It's the inverse of what we see in the other environmental condition, the red candle in a green channel. And even when this thing ends up flipping around, not everything's a home run. Even when it flips around, you still had this opportunity to exit. This was not really a bad buying opportunity as long as you saw the indecision in the trend here, the oversold here, or I'm sorry, overbought here, and you could have got out there. That would have been all right. And even if you would have taken that, you still are not in a bad condition or in a bad state if you bought low in the channel, right? But ideally, you were looking to buy here, and you were looking to sell over the top of this cloud. This zone, these clouds act as markers on your chart to tell you that, hey, if I sell over this level, I'm selling high. It's like, it's not all that different than seeing an oversold or overbought region on an RSI or a money flow index or any other indicator that shows overbought and oversold regions. They're just ones that are showing clouds on your chart. So in theory, if you're selling in these regions, you know that you're selling at a high price. And ideally you're looking to sell over the top of the cloud each time. And they typically serve as reversal zones. This kind of cloud, these are the ones that kind of make me hold back. This price is trending into it, and it's a nice cloud. It gives you one, two, really about three opportunities before it falls out to go ahead and pull the trade. It's coming back. This cloud is telling you eventually that price is going to come back to you, probably a short order. And sure enough, comes back down toward the base of where the cloud started, right here. That being said, this region usually is going to tell you it's a reasonable time to sell, especially if you had the foresight to buy in at the base of this. This was the hit to the top of the channel. This was the step back. And you start seeing the transition. You see this big bullish spike here. The reason it's doing this is it's popping the channel. It's pushing it up and then breaking through. So it's like, think of it as like knocking the door open and then it's going to go through it. So that is kind of basically how I look at it. And even in this situation where you end up with this big bullish candle that comes out of nowhere here, you would have been better off selling this candle in this environment. You get this drop out here. This candle closed well below where you were, but it went all the way up to here, which tells you probably are looking at a reversal soon. These are the squeeze dots. They indicate a squeeze condition. Most of y'all are familiar with price squeeze. And as far as I've basically called these oversold points, or I'm sorry, overbought points. And that's not exactly the way to look at them. The reason I include them in here is these are zones that if you are entered into a trade, these can pose zones for you to think about taking risk off the table, because each progressive candle that goes up, while that is awesome and it feels good for you to be making money, you're in a profitable position, as price goes up, it actually becomes riskier for you to be in this position. So for those of you who scale into and out of positions, these are opportunities for you to scale out of the position before it turns against you. All the while, you can continue riding it up, and that way, if it does turn down on you, you've scaled out of it mostly. You've taken your profits off the table, and if it goes down, it goes down. If it goes up, it goes up, and you can think of it in that sense. It's a matter of scaling. And as always, I would suggest if you see a cloud like this, these are great opportunities to go ahead and take your risk off the table. Your play was here. Your cloud is here. Look to sell that thing. Does it go up higher than where you were? Yeah, it does. So what? You can't think like that. You can't afford to put your mind in that sort of state, because what happens is you'll catch yourself thinking that at the wrong time, and price will turn on you. And as I say all the time, it's the stairs up and the elevator down. You get the express ride down. Taking your profit here makes you intelligent. It makes you a smart trader. You're making profit from here to here. play in this zone where you know you can play. Even the B4 is down here. You can see that it's starting to try and turn on you. It just becomes riskier the further you take that. And sure enough, eventually it reverses and hammers right back down into a red channel where you have sell, sell. And then right here, you see it buck the channel, stay up here and turn it. And we get some sideways trading. Anytime you see these bands, both of them up or one up and one down, and it's hovering in mid channel, there's some real price indecision there. There's likely squeezes occurring. You can see a squeeze occurring down here, see a squeeze here, and it's looking for direction. So that is kind of a basic layout of how I look at these. And you have to look at them together. You have to look at them in context. This is amazing for determining the near-term trend environment. These are what you need to be looking at to determine the intermediate-term trend environment. And I would like to go ahead and pause for a second and take any questions. Yes, I actually like the way you put that. It just means that. Yes. To tell you the truth, a lot of people put a significant emphasis on this number. And it's not really as relevant as many of you might think. I built it to be a binary sort of situation. So I wanted to take the thought process out of determining whether it was, at a level of -14 or if it was at a level of +7. I mean, that kind of defeats the purpose if I'm looking at that all the time. I want to know if it's red or if it's green. The thing that's more important to me is knowing whether it's decreasing or increasing, because that gives me insight to the momentum behind a move. If I see more studies in agreement and continuing to get into agreement, that is telling me something more bullish in nature. And like I said, the number doesn't mean as much as you would think. The other thing that I'm watching for here is for overbought or oversold indications, and that's when it's turning either red or green. Those pieces of information, so whether it's increasing or decreasing, and whether it is oversold or overbought, these are the things that I am personally looking at on this. If you want to look at the number, fine, that's good, but don't fixate on it. Don't try and rack your brain to figure out what's going on with the number, because it's kind of just wasting your time. In my opinion, the right way to look at it would be to look at it as a binary sort of situation where it's either green or red. I included the number up there for those that like the lower indicator but may not have wanted to take their chart space up with the lower indicator. So those of you who are used to looking at it, it gave you something to kind of visualize, if you will. That's a good question. Is there any other questions? All right. Yeah, I have a different way of looking at breakout and breakdown. And it's accurate, but it's not something that I think most people would have used to do that. But So the way that I look at breakout, a lot of people would say, well, a breakout means that it broke above a certain price range, right? Or it came out of a consolidation period and it broke out. So for instance, we have this right here. We have all this accumulation right here, a bunch of basically channeling going back and forth in this zone, very volatile price action. And then you get your breakout. Squeeze, bucks the channel, squeeze again, and it's out. That was a nice breakout. This would have read as a breakout on the indicator. And the way that I determine whether it's a breakout or not is I'm looking for agreement between the bands that I use within the indicator. So when all of those are in concert and they say, hey, it's going up, that's when you see breakouts. That's when you see the push that actually, goes that direction. Breakdown's the exact opposite. This right here, I guarantee you, in this section, it was reading breakdown. The bands were in agreement that it was moving down. The color of the channels themselves are determined by the Keltner channels. For those of you who are familiar with the Keltner channels, they're really, really good at determining trend. Whenever those bands are in agreement that it's going downward, it's going to be going downward. But even more, I don't just use the Keltner in that determination for the breakout or breakdown. I also use start bands. And the reason I like using Stark is because their calculations are very similar. They both use average true range, but Stark is done on a shorter period length and tends to be more reactive. And whenever they get into agreement, it's usually a pretty large move, one way or the other. So that is basically how I determine breakout or breakdown. Does that make sense to everybody? Okay. Are there any other aspects of the indicator that that y'all have been having issues with, or a specific chart or situation where you were trading and you found it difficult to interpret or would like me to take a look at? I'm happy to take a look at specific instances that you may have had issue with.
I just have a question on the sideways moves. The example that you just showed there.
Here?
Yeah. How would you avoid, taking any trades when it moves sideways?
The way that I look at that in the sideways move is that oftentimes you'll notice that the bands are rotating back and forth. So what that's telling me is that there's no agreement in the trend direction. You see this spotted sort of appearance to it. It's green one moment, red the next. And you also notice that it's consistently tagging basically where the previous high was, and then coming back to the low. Boom. And then this right here, these two moves, this was opening up the volatility to make the move up. So a lot of times you'll see this happen. I have various names for this, but this is basically a head fake. This is where most of the traders, you would have got in either here or here, and then you get stopped out right here, or you get stopped out right here. You don't want to play in these zones. This isn't where the meat of any of the moves are. I mean, if you're a seller, then you want to be selling here. This is a excellent opportunity to short. This is telling you, hey, I'm up here, buddy. I'm in a red channel, and it's not looking very good. And then it's even better when you combine it with the B4. Look at this. It's telling you, hey, look, we have a squeeze going on up here. And where was the B4? The B4 is calling it underneath the lower band. So, okay, so there's definitely a trend switch going on here. And then we get our green candle. So instead of thinking, hey, this is a green candle, I should buy this, and then having it turn against you, you take the indication of the trend environment. You're rotating into a bearish trend environment. And this is a green candle. Those of you who use the B4, look at where the MACD BB line is. It's underneath. It's telling you it's a great time to short. And right there, you will have tremendous luck in that sort of situation. Just like the red clouds show overbought, this shows oversold. So if you took that position and you shorted it, then you're looking to get out of that position somewhere in the range of the backside of this cloud. Obviously the lower the better, but the point is that you take your profit. Don't get hung up on staying in a position because you are winning, because in the market that can change very, very quickly. And to have a profit is to have a profit, and taking that profit will never hurt. This is the other thing with the clouds, and this is kind of a different way of looking at them. They tend to have support and resistance at their endpoints. So here you see the end of the cloud, and you can see where price over on this side right here gained support for the move upward. It pulled this tweezer bottom here and ends up bouncing right up out of that zone. And this was really your big cue to know that things are turning. This is a very powerful setup. It's punching the top of the channel up. Pay attention to which way these near-term lines are moving. Whenever it's pushing it upward, it's usually a pretty good sign you want in that. A lot of people would see this line. I know whenever I started looking at price channels, I would see it in contact with the line, and I would be like, oh no, it's probably about over any time now. And that's not really the way to look at it. When this thing starts pushing, you start seeing this push going on, that's telling you it's a bullish move. It's bucking that channel up. Whereas the inverse is true. You see it starting to push this lower line down, your trend environment's changing. This line doesn't move down very often unless it's a bearish environment. Just like this one doesn't move down very often unless it's a bearish environment. It's moving up with price. So when you see this fallout creating the volatility and this strong stand, this is telling you this move's turning. And that's the way that in this choppy action here, that's the way I view the price action. This is basically telling you that you're going to have support here. And then you get the validation whenever it takes the support level and runs. And this is starting to look like maybe a position for those that are aggressive, mainly because of the candle action here. I like this because it opens up, it's continually opening, comes back, gets support on the region that you're looking for to gain support, and then it goes up. This gap up would also be a significant marker to tell me it's looking good to potentially get in here. For those of you who aren't as aggressive and you want to stay out of this choppy mess, the next spot to look at would be right here. This is your classic red candle, green channel, and you play it hard. You get your profit and you get out. This zone right here is your zone to get out. any taking a profit in this zone, take your profit and be happy. And don't get hung up on staying in it, because as I said before, having the profit's more important than waiting around thinking you got a winner. You're not married to any instrument that you're using for trading. You're in this to make money. So whenever you have profits, whenever you have these regions, you have to take advantage and get out of there. There's always another trade to make, always. So don't be married to this trade. You just made money. Time to get away. No big deal. Wait for your next setup. Otherwise, inevitably, you end up either chasing, which chasing, I'm sure a lot of you all have done this. I know that in the past that I've caught myself chasing a curve, thinking that, oh, it can't be over. Yeah, that was a real strong move. Don't do that to yourself. Get your profits and get out. This is a reasonable spot to get into. You see, right here you have gray. This is indecision. This is kind of a little bit of that choppiness that you see, but this is bullish right here. It's a nice break. It fades back, and this right here would give you pause. But once you see this, it's that same candle action. It's creating the volatility and pushing back upward. By the time you get to this candle, you have a green channel, which can serve as your confirmation to get in this move and take it all the way up. Here you don't get a cloud to get out, but you can certainly take some position off if you scaled in or you want to scale out. Or here you see this is almost an exhaustion gap. What you see after bigger moves. This would probably pose a really good opportunity to get out of the trade if you were still in it at that point. Or you can always wait till the candle changes down, and inevitably look where it brings you back to. If you went out on that candle, you're basically getting in on where you could have reduced about 2 to 3 hours ago. So it was kind of all for naught, and that's why I say if you wait and you think that the move's just so good, a lot of times you get burned on that sort of mentality, and you don't want to think that way as a trader. You want to think about where the money's at, and you don't want to give the money back. So once you get it, you want to keep it. Is there any other questions?
Could you please go back to the last example that you just showed?
Is this it? Or are you talking a little bit further over here?
So I guess that, no, the one that you just passed. The other one.
This
I was
one
just
right
thinking,
here.
like, where would you take the short? Where would you short that one? I mean, if you need to sell a short positions, where would I do that? And I don't think. Yeah, I think that's one. Yeah, so
I
if you
would
just
not.
take. Okay.
I would not look to short in this scenario. That's my.
Yeah, I'm just talking about where you pointed. I'm sorry. Yeah, here.
So in
would
this
you
scenario, I mean, technically, just looking at
Because
it
channels are red
in
and-
concert with the B4, if you are somebody that likes to short, whenever I saw this line being bent back, and I see the MACD BB red and well below the lower band, this could signify an opportunity through here to short. I personally like setups like we saw earlier, where you see this high hanging one in a red channel. It's usually a much stronger move down. Not to say you can't make money in this position. You might just find that it takes a little longer for it to manifest. You see here, you even end up with a piece that squeezes here, and it just it's a slow move. I wouldn't have taken it here because the channel's still green. And at this point, it's just moving sideways. If you wanted to use that and think of it in terms of the B4 with it, you might have been able to take it a little bit earlier if you wanted to short it, but sometimes you'll see that kind of price action and it will go ahead and continue upward. But the giveaway here is that the channel changed. The bands weren't in agreement. So you had gray, you had the MACD red and below the lower band, and it's telling you that this thing's going to fade. And it really just doesn't have a lot of momentum behind it. So I would be really leery of shorting anything in this position for a bunch of different reasons, but it'd be a very difficult position to play for me personally, because you have this slow movement, you have a very slow move there. This one's not bad, and then you're squeezing. This one makes a decent move, but then you pop right back up. And I think the entire time it's just kind of a nail biter while you're waiting for this thing to manifest. And ultimately it ends up turning on you and coming right back up to the squeeze level, which you don't really get much of an indication of getting out of this prior to. You're trying to break through the bottom band here about the same exact time that the candles go green. And then the channel's starting to turn on you. So this is a very difficult area to short, and it wouldn't be one that I would suggest trying to do a short play on if somehow you have the foresight to grab in at this point and you think that's a good area to take it, then so be it. Go with it. It just isn't what I would do personally. Did I answer your question?
Yes, thank you.
Yeah, absolutely. So another thing that I'm sorry, does somebody else have a question? Okay. Another thing that I see a lot of traders doing, and for those of you who have been doing this for years and you're more advanced in your understanding of price action, that's amazing, and it's a skill that you develop, and that's fantastic. But a lot of people jump in, they try to scalp on these lower time frames, and I'm talking like south of a 10-minute chart, looking to scalp quick profits. I'm not saying that you can't do it. I'm just saying it's not a good starting point for most people. Think of it as being the equivalent of being the Michael Jordan of trading. People that are successful at scalping on those levels have a superb knowledge of price action, and they can see it. Not everybody has that. New traders generally just don't have that. Traders that have been doing it for a few years still generally don't have that skill. It takes time to develop. This is pause on my point here because I want to show you all this. One of the things that the channels can show you, a lot of times you'll see this prior to reversals, is you'll see wicking. And the wicking, whenever you see that along the bottom edge of the intermediate trend, is telling you that this thing is likely to start going the other direction. I'm not necessarily saying that just one wick, or it can, that can indicate going the other direction. But when you see these multiples, this thing's looking to go up, and it can, for people that are aggressive, more aggressive on their entry strategy, this is a good position to kind of look and say, I might want to get into that. It's an indecisive trend environment, and would likely be more, if it's indecisive, I treat it as if it's a red channel a lot of times, especially in the chop, in which case, if you play a mean reversion, you take it low toward the channel, you want to grab it as close to the channel base as you can, and you want to sell it into the green. This is not one that you would stick in for a long time, but this is an interesting signal that is worth considering if you're that style. But back to back to my point though, as far as trying to scalp these lower time frames, it can be very profitable, but it can also be very challenging, and it can be a way that you blow up your trading account before you even get started. So for those of you who like to do that are more advanced, again, kudos to you. That's awesome. And that's a skill that you've developed and you should be very proud of. It's not something that everyone is equipped to do, especially at the outset. So what I would say to those of you who are daring enough and you want to try it no matter what you're told, at least have the good sense to go to a day chart, look at the day chart, look and see what trend environment you're trying to play in, because this is the dominant time frame. No matter what your lower time frame is that you're on, the day chart's significant to you. Okay. I would be way more tempted to try and scalp an uptrend somewhere in this position, especially once I see this getting close to support. This is becoming more interesting as a potential scalping environment. And once it starts making this bullish run up, you could start being more confident and being in an environment where you can be profitable trying to scalp. But what happens, and I'll tell you, this happened to me when I was a new trader. I would be on a lower time frame trying to scalp a 1 minute chart, right? And the reality was the instrument that I was trading was actually mean reverting. On the lower time frame, it looked pretty good for a minute, and then all of a sudden, it just will turn into a disaster. And that's hard. I mean, that's really hard. Like this piece right here, this candle goes all the way up here, and on a lower time frame, you're thinking, oh, this is gangbusters. And then all of a sudden it is down here. And you were scalping it, you were in the wrong position, and you get burned. So I say that to just say, please use caution. Trading is inherently risky, and it's something that takes time to learn. And make trades that you know that you can be successful in making. Trade with statistics in your favor. This is more statistically favorable for the environment that you are trading in on the lower time frame. So before you start your day, look at the day chart and get an idea of what you want to trade. There's no reason that you should be, unless you're somebody that loves to short, trying to trade in this environment and trying to catch upward moves. I just would caution all of y'all from doing that until you are very adept at trading and understanding price action before you dive into this environment trying to scalp out small profits. It just doesn't make a lot of sense for most people at the outset. Now, after you get your skill sets polished, you have your indicators that you use, you trust the signals, you know how to read the signals, it becomes a little bit of a different story. But for those of you who are new, don't feel like you have to go to a 1 minute chart, a 2 minute chart, or a 10-minute chart to scalp something, because that's not where you're going to be profitable at the outset of your trading. You a lot of times will find that you're more successful at understanding price action on a swing style trade where the trade has a minute to actually develop. And it's also a very, very profitable strategy when used correctly. Anyhow, that's just my rant on that for a minute. And it comes from a good place, guys. It's something that I frankly personally did. Like I said, I started out scalping 1 minute charts, and it just doesn't always end up that well.
Chris, do you have a time frame you'd recommend to start with?
Well, that's a really, really good question. I believe wholeheartedly that regardless of time frame, let me say, you need to have targets. You need to have in your mind where price is going and how long you're going to ride it there. So, and the reason I say that is because of kind of what I was telling you earlier. You know, you see price going up and you're like, yeah, hey, this is awesome, I'm winning. And all of a sudden it pulls this number on you and you lost all your profits. That stinks. And the reality is you probably could have set a target back here. Okay, well, I entered this trade here. I can either say, well, if a cloud comes up, I'm going to look to exit in or above the cloud. I'm going to exit if it breaks support of the cloud. I'm going to exit if I see an overbought indication, or if this is saying overbought, is flashing red. These are signs that, you know, that's not exactly setting a target, but you're creating a rule set for yourself that will help you be more successful. But, you know, for instance, if I entered in this trade right here and I didn't have anything else really to tell me, yeah, this was a red candle, green channel, and this would be an excellent setup. Looking at it, this is a day chart we're looking at. So to swing trade this is certainly feasible. And if I didn't want to necessarily count on anything else to tell me a target, well, look at the channel. Look to the left, as Chuck always says. That's one of the best things. Look to the left, guys. And you entered in here. You look to exit here. If you want to set an intermediate target or near-term target, these channels can help you do that fairly easily. And you see what happens here. You start seeing wicks punch up towards that previous high, and it squeezes again and ends up going up. And as I said before, who cares? What you care about is entering in here, setting a target, hitting your target, and getting out because you just made a profit. And you want to rinse and repeat over and over and over again. And that's where you find success in trading. Now, for those of you that it's still kind of fuzzy on how you might set a target, having a rule set can also be good. Just in general, a rule set on when am I going to exit my trade? Whatever that might be. Like I said, it could be that price is over the cloud. Could be that you want to scale out whenever you see these red dots come up. It could be that you want to get out when the B4 is breaking through the upper band. Maybe that's your signal that I want to get out of this trade. Whatever it is, stick to it. Don't talk yourself out of it. Stick to your rule set. It's when you vary from your rules and your strategy that you will find that you make the biggest errors. And it's easy for any of us to do. It's just the nature of it. So same thing goes with entering in a trade. What's your rule for entering in a trade? I don't know. You know, that's a good question. Well, if you're using C3, you have a green channel, a red candle near support. This is looking pretty good. And that's where I'd be looking. And in this case, you know, you could use a variety of methods to set it. A lot of times when you're coming up from the bottom like that, you have the candle there, I might be looking to set my target right here at the base of where it broke. You see where price broke down here? This channel right here is likely to serve as a resistance zone. And that is exactly what it does. So this would have served as a good target. Here, use the channels to help set your targets. And it even looks like, let's see, just barely. You can just barely see that cloud. You'll see that, it's just right there. But regardless, before the cloud even showed up or before you even had that little overbought point there, you had already hit a target, a very reasonable target. here to here. That's a beautiful swing trade. You would have been in it for, it looks like, close to about 2 weeks at most. And you would have got out and done well. These are the trades that you want to make as a swing trader. Now, you don't have to use the day chart to swing trade. I would use it for context, at the very least, on the trend environment and what you're stepping into. Swing trading, I like actually swing trading 2 and 4 hour charts as well. But again, take them into context with the day chart. And for those of you who really like to dig deep, look at the weeklies. Look at the week chart too. There's stuff that can be gained there, especially if you group it with the balance of volume, that can give you just really critical insight. You know, you might see a move here on the day chart that's going up, but all of a sudden you go to the week chart and you look at the balance of volume and it's going down. So the price movement, while it's up right now in the near term, it fades out real quickly because it was a movement up in price on low volume. So those are kind of just some little traps that you can see that you wouldn't see otherwise. Sometimes you have to back out, get that bigger picture, and then drill down as you progress in your understanding of it. That was a very good question. Did that help answer that for you, or is there another facet that you'd like me to discuss?
No, that helps. I mean, I think that one of the takeaways is you have a system and you follow rules, especially if you're trading for income, because otherwise you're basically gambling that you're going to do better, right?
Bingo. That's exactly right. And it's human nature for us to get excited when we have a win. And it's even more human not to want to let it go, even when we see it slipping away from us. So these rules help keep you from doing that. Familiarity with your indicators also does that. Having a solid set of indicators. I mean, you guys think about it this way. You know, these large hedge funds that are, using algos to trade, and when they auto trade this stuff, do you think that, whenever a buy signal comes up, do you think the the computer goes, I don't know about that. I don't know. I saw that buy signal last week. I just don't know. No, it doesn't do that. It takes the signals that it's supposed to take, including when to get in and when to get out. You have to think that way because it takes emotion out of your trade. It gives you structure and it gives you an ability to be profitable. So that being said, have any of you guys been utilizing, there is a, for y'all that are swing trading and even you guys that are scalping, if you're looking for momentum type moves, there is a scan that I have put on the Use ThinkScript forum. It's on page 9. I would highly suggest going through the effort of setting up that scan and running it in the morning and running it toward the end of the day to see what's coming up. And I specifically run it on my watch list. You can kind of get overwhelmed if you're looking at the entirety of the market. For you guys that don't have watch lists developed yet, work on developing your watch list. Look for market leaders in certain sectors. Just do your research. Find the ones that are speaking to you that you want to watch, and watch those, and run your scans on those. And you'll find that you have a little bit more success at picking out winners. That I can speak to the efficacy of that scan. It has at times been absolutely scary at picking out strong momentum plays. And if you're a swing trader, it can be very useful because from there you can look at the day chart, see what it looks like, drill down, look at the time frame that you want to enter into your trade, and find your entry point. That is a very, very nice way to figure out, those swing trades that you want to be in. And it also gives you structure for finding your moves. And it's just that it's one additional facet that you can add. And if y'all are curious, I can show you. Here we go. So what that scan is looking for is a condition that,
We're not seeing, I think, what you're clicking on.
yeah, here you go. Can you see it now?
We see ES still with the moving average cloud now.
Bingo. That's exactly what I want you to see. That's great. So the condition that the scan looks for is something that honestly I kind of stumbled on. But it seems to work well the majority of the time. So what it's looking for is a red cloud with these green lines going around it. And I know y'all might be asking yourself, well, what the heck does that mean? Well, what that is telling you is this is the weekly average. This is the day average. They're both 10 EMAs on the week and the day chart. Whenever these lines turn green, both of them are pointing upward. So this speaks to a very, very strong move when you see these in concert. And you usually see it prior to a breakout. You see the aggressive price action that happens right here. It's, obviously the day is picking up the move here. The week average is starting to pick it up here. And then you see the breakout. It steps back to the average, and then it continues its move upward. This signal right here can be for some of you, it could be your bread and butter on making your swing trades. It can also indicate opportunities for scalping, especially when you see the breakout through that average. They're usually very, very bullish moves that smack the top of the channel and then come back. For those of you that don't like playing in this territory where it's making that breakout, look for this step back into the average. That is where you might want to find yourself getting in. You can see it does it repeatedly. Here's another instance. Boom, smacks top of the channel, walks back, and then continues on upward until you get this nice little signal here. Conversely, if you guys who like to short, you could technically reverse the scan to look for a green cloud with red going around it, basically saying that both averages are pointing down and this thing is getting ready to turn south. And you can find some nice short sell scenarios potentially. But this is, there it is again. I want to be in here. This is fantastic. This is a swing trade. Hey, maybe my rule is whenever, I enter whenever I see the spark. For anybody that's curious, the reason I call it spark is because of the price action leading into it. You always get a dropout, almost always get a dropout in price prior to the move that's opening up volatility. It's like pouring gas on on whatever you're trying to light on fire. Pouring gas on, and there's the spark, lights the fire. So here's your spark, boom, goes up. So here's your rule. Day chart, you're looking at that, average goes red or price closes below the average, you're out. That was a nice play. Worked well. If you wanted to, you could technically go ahead and get back in there and when it broke back up through the average. But really, I would just be looking to go get this again. This is a powerful move when you see it. And here's the inverse of that move. Look how powerful it is. It's just, it tends to lend itself to really strong setups. So for you guys that swing trade, page 9 of my thread, you might take a look at that one. It can be a little bit of work to set it up, but I think you'll find some nice trades out of it. And today was a weird day. I will say. Yeah, I mean, there you go. Typically, whenever I run it on the broader market, it's usually about 95% of those symbols will be in the green. So today was kind of an odd day. There were some that signaled that hadn't really fully broken out yet. A lot of them, for those of you who use Ichimoku, a lot of the price action I found was actually in the cloud still, and it was in consolidation. It was kind of a strange day. And those stuff like that happens. That there it is again. It's just a nice one to catch. So for those of you that are struggling to find something on a swing trading basis or stuff that has momentum for scalping, this might very well be the thing that you can use to give you structure to finding what you're looking for. And then all you have to have in place is your rules. Don't enter these trades. If you enter a trade like this and you don't have a target or you don't have a rule to get you out of that trade, you shouldn't have entered it, regardless of how good of a trade it is, because you don't know if that thing's going to turn back on you now, later, whatever. You don't have a goal. You don't have anything set to give you an idea of when to get out, because I'll tell you, there's literally hundreds of stocks on any given day that will show an action similar to this. So don't get hung up on staying in it. If you wanted to just play it for the day, 2 days, and get out, and you had a target, maybe your target was this near-term channel. Great. That's fantastic, because it gapped up and went through your channel, hit through your target. If you pulled up here, tell me that wouldn't be just a wonderful day. Look at that. Everybody else stayed in that trade. They had to wait about another 2 weeks before they got up to the level that you pulled your trade, because you had a rule, you stuck to it, and it just happened to work out really well in this instance. So you can move on from this trade much faster and go into your next good trade. So you're not married to this. You're doing business. You're making money right here. This is your entry point. This is your exit. You knew before, whenever you entered the trade, that, hey, I'm going to get out either at the near term, because I see price tapped up here and step back. Figure this is a reasonable area in case price decides to keep channeling. This is where I would like to get out. I would also like to get out if price happens to violate the average and come back and close below the average. I don't want anything near that. I'm going to cut my losses there. Those are the rules you stick to. And if you guys like to use the cloud on a lower time frame for scalping, you can use it in the same manner. You'll have to play with the settings to get it right, but like I know I've seen some very nice examples on 5-minute charts showing the price action and utilizing the clouds that have worked out extremely well, because these signals do exist on smaller time frames. They're just not as strong. This one on the day chart is telling you it's a well of a signal. It's going to break out. So that's kind of something that I would look at for anybody that is having a little bit of difficulty in finding what they want to trade in a given day, or just keeping a nice rotation going through. It can just give you that structure and keep you excited. Honestly, I love coming in and seeing what's on my scan, or even better, for my watch list, I'll set my alerts to go to my phone, so I can see what's getting ready to break out at any given point. I get excited when something in my watch list is about to break out. I'm going to go play it. I'm going to swing trade it. Absolutely. Are there, you guys have any other questions? Okay, so see if we have any. This is probably a fair example here of using this. So you can go with a 10-minute, and I would think on a 10-minute time frame, I would be shooting for probably an hour, maybe as the other one, or maybe 30 minutes. I just have to see what it looks like. If y'all like to use these on the lower time frame, yeah, you're still getting that signal. Like I say, you just kind of have to play around with it. You can get the signal, get a little bit late there. That's a good one. Yeah. So
what are your cloud settings here for the 10-minute? You have the hour and the what?
I matched it up. My lower aggregate period is 10 minutes. It matched the time frame that I'm on. That's
Gotcha.
not always necessary. I like it though, just because it kind of keeps you linked into the time period that you're in, and avoids scaling issues of using larger aggregate periods. And you still get these nice signals. I mean, look at that short signal. That is a monster. And then look at,
pretty incredible.
and then there's a nice long signal right there. So if you're curious, hey, when should I take a trade? Should I take it down here? Should I take it up here? Well, you might consider using the moving average cloud, and look at it, give it context, right? You know, make it fit your time frame. If you're somebody that wants to scalp on a 10-minute time frame, find what fits into that time frame and use it. And use these tools. Look at this. B4 is calling it out right there, and it's a beautiful squeeze. Boom, boom, squeezing. You see this bullish price action. Most of us in this territory would be looking at that saying, I don't, but look what happens. Look at the B4. It's telling you it's squeezing. It's telling you that you're above the band. And then you see this. If you're not in that to win it, I mean, this is your sign. Get in there, go get it. Stick to your rules and just play it out. So that's kind of how I might consider using that. Those of you that like to use Ichimoku, intermingling the cloud portion of it is pretty easy to do within the channels. I'm sure some of y'all have seen people that have utilized that. I've seen some really cool examples of it. And just for fun, I had built in a couple on a modified version. Here we go. It also gives a huge amount of context. So this is obviously not the full Ichimoku system. And for those of you who have never looked at Ichimoku, look at it. There's so many valuable principles in trading within Ichimoku that frankly, just a lot of people they don't understand it, or they look at the chart initially when they look at Ichimoku and they find it to be too busy or difficult to understand. It just takes a little bit of reading, a little bit of looking at charts, and you start understanding what all this means. But I mean, in a very basic sense, you know, these things, they're support and resistance levels, and you're looking at you're looking for instances where it's gaining support. So this part of the Ichimoku cloud is Cinco Span B, and it's also known as last stand. Okay, so this is the last stand for price price has slid down. It's entered into Kumo or the cloud here, and it comes in contact with the last stand or single span B. And then it just busts through the cloud in an epic breakout right there. That's that's beautiful right there. These are consolidation areas. You want to be leery when you see the cloud going flat for given several periods. When it's getting flat like that, that means that price action's not going up. This is displaced forward in time. I believe 26 periods. When you see the cloud doing this, remember, you're here. You're over here. When you see the cloud doing this, price is escalating quickly. It's consolidating through here, and then it continues going up extremely quickly. You get that consolidation period, and remember, we're over here. What's going on? It's, well, price is consolidating. Well, what about the top of the cloud where you see single span A and it starts going down? What's going on? Well, what do you think's going on? It's going down. Just plain and simple. It's going down. And here it's going down. You're in this section right here when you're seeing this. This is telling you the trend is fading. Here you start seeing signs of the trend fading. Prior to that, you see flats, but you don't see a fade out of single span A. It continues upward movement until here. This is likely, if I haven't counted this out, obviously, I'm just now pulling this chart up, but if I had to guess, this is probably somewhere in this zone. It's giving you a heads up that you would probably want to consider looking at getting out of that trade. Whenever you see the top fading down, the risk is definitely increasing and staying in that particular position. You're likely to be able to buy back cheaper. A lot of times it's good to either scale down or scale out completely and wait for the move to come to you, which right here it does. If price is going to make a stand and gain support, it usually will either catch an updraft on the front of the cloud, which you get a small one here, or it catches support at the base of the cloud. If it doesn't get support on the base of the cloud, it's rainy days ahead. It ain't going to be good. You want to wait. So just a little bit of insight. That is very, just touching the tip of what Ichimoku is about. But nonetheless, having just that little base knowledge of how to look at the clouds, it just gives you more perspective on when you're looking at support and resistance levels, how to interpret them and how to interpret the price action that you're in currently. And it also gives you an idea of what price might be doing in the future. So it's something that you can incorporate. You can kind of see it fits, ironically, it fits very nicely within these price channels. And for anybody who's wondering, no, I did not plan that. But Ichimoku also matches a lot of my trading style. And what I tell you guys when utilizing the candles and the channel here, here's a red candle that gains support, green, it's a little bit speckled in here, but it gains support and then ends up turning green and going. So this right here, it's gaining support within the cloud. You have the 20 period giving it support here as well. Wow, this would have been a nice play. And you wouldn't have even had to have entered this thing until right here. And look, the B4, what a nice concert you're getting right here. This thing is saying it's a go. You caught the updraft on the front of the cloud. You catch the breakout on the B4. You catch the trend change here. You see the bullish trend environment here. Also, price being where it is in relationship to the cloud, and the cloud trending upward is still is very bullish. This is where you're looking. That's happening right here. Remember, displaced forward. So this is this. And it continues to go up. You see the consolidation zone. This is area where you're definitely starting to think, might want to be thinking about taking some risk off the table, especially once you get to here and you start seeing red candles. You've already faded out on the B4. And actually the B4 is doing a good job right here identifying the consolidation zone. And I believe if we were looking at that in real time, it's probably in concert with the flattening out of Cinco span B. And it just looks really good together. You get a cloud here that also kind of indicates that, you know, this level might be a reasonable one to start thinking about reducing your position and getting out. Whatever your rule is, stick to it. Stick to the rules that actually fit your indicators. You know, you could just as simply say, well, I'm going to enter a trade whenever the MACD BB line breaks through the upper band, and I'm going to get out whenever it, you know, crosses back through the upper band. Whatever your strategy is, just stick to it. Have those rules, and make sure they make sense. Test them, and don't test them on huge sums of money. That scale your positions, know your risk, and make smart decisions with the knowledge you have. Because even the best trader can make a wrong decision, and if scaled improperly, it doesn't take long for the market to go against you in a big way. So scale in properly and stick to your rules. This is a nice example of a strong escalation. You can see it happen right there. And I mean, this is one, again, geez, guys, I mean, this setup it's gorgeous. You don't get the red candle in the green channel in this case. And this is when it comes in handy to have multiple things. I personally love using the B4 along with the candles because when I see this, it is below, but it broke out of the upper side of the MACD BB. So that's got me curious already right here. And I see these candles still. I'm like, well, this is still in a shorting area. To me, this is where I don't really short. So the fair thing to say, this would be a sell position for me. If I bought in this zone, in this cloud, I would be looking to exit here. But then you see this, and you see this, you see the channel change. This piece was your entry piece. This was where you wanted to be in, continued through. I would probably have set my target for this move at the base of the cloud right here. I would be looking for it to get into that cloud level. Another one that you could potentially have considered was looking at the 20, maybe toward the top of the channel if you wanted to go there. But this cloud's relatively thin through here and stands a high probability of being broken through. But at the same time, reach your target, take your money. If you want to play it until it crossed here, that was good too. It worked well. If you wanted to play it till it went above the cloud here, also good. But key is have those targets. I talk to people all the time. They're in a profitable trade, and I ask them, say, well, what's your target on that? And inevitably, most people will say, that's the answer you get. Most people don't have targets. So you have to be smarter than most people. When it comes to your trading, you have to go ahead and have the target. And I know some of you guys out there are thinking, well, technically, in the person that stayed in it and rode it all the way up to here, and that person, the smarter one in terms of the play, well, if they did that and they pulled it at the right time and this was their rule, then they did good. That's not what it's about. It's about having structure. But I'll tell you, the person that grabbed it somewhere in here and then rode it all the way up to here, 9 times out of 10 will be the same person that rides it all the way down into the dirt right here and then exits their position, which isn't much better than you would have been exiting down here. So the difference between them and you is that you could go find another trade in the interim that was also profitable and just continue. My thoughts on it, for whatever it's worth. Anybody else?
Could you just speak a little bit to the Stark extension bands just for a sec?
Yeah, of course. I came up with this idea, and actually they're partly responsible for what made me think of the breakout versus breakdown, and using Stark um, along with the Keltner. So these things, if you guys are using them, for you guys that are using them, they tend to act, very simplistically, I would say, they act like headlights on a car. So typically where they're pointing is what you'll see price, that's where you'll see price going. When they're crossed out in front of price, like, at a similar level to price, not crossed down here somewhere, crossed up here somewhere, it's typically indicative of maybe this type of situation where you have a squeeze going on, or if you have a narrow channel and price is working its way through it, a lot of times you'll see them start to get fixed out in front. In which case, what you're looking for with these is agreement and direction, and also the action that they make. So if they were crossed here in front, what I'd be looking for is if I was in it wanting to maybe try and make a play on an upward move, I would be looking for this top one to open up and for the bottom one to remain a little bit flat at the beginning and then come out into it. And the reason I say for it to be flat a little bit at the beginning is, remember, these bands, whenever volatility spikes, they will go they go wide, which a lot of times will mean that you might have one of the bands still staying down, just very, very near term, and then they will agree and they will point a lot like these are here, except upward. They'll be parallel moving upward, and those are really strong moves when you see that happen. You'll see them cross at times, and it will call out prices. And the reason for that is you'll find that they cross a lot of times on support and resistance zones. So you can kind of think of it as, these two guys are agreeing, hey, when they cross, hey, we're going over here. This is where we agree. This is where price. Let's go here. That's kind of a weird way to look at it, but they're agreeing on the direction of price, and a lot of times you'll find that there's overlap on those prices. It's harder to see sometimes when you're on lower time frames because these extensions will move a lot on lower time frames. So when you see prices called out, it may be difficult to mark them or to necessarily remember them. But if you see price just repeatedly going into a zone, just put a line down, mark it, and keep going. A lot of times you'll find that it comes back to that level, especially if you're seeing, the other trick is if it starts, crossing over a level that you can see support or resistance, maybe you get across and it's in line with Cinco Span B, or you get across and you look back, you look left, and you see that, oh, well, that's in line with my channel top or channel bottom. That's likely to be a zone where you're going to have substantial support or resistance. And it's also telling you that there's a fair chance that price is going to be going that direction in the near term. Does that help with kind of understanding a little bit of the thought process behind those?
Yeah, yes, it does. Thanks.
Yeah, absolutely. All right, guys, is there anything else that we can address with the C3, or anything else that I could help give a little bit of insight on? All right, guys. Well, if I don't have any further questions, I will go ahead and kind of wrap this one up. And want to thank y'all for obviously being here. And those of you who talk to me fairly frequently know that if you have any questions, reach out to me, guys. I'm more than happy to help. I do my best to make sure that y'all have a good understanding of the indicators, specifically the ones that I've either helped to develop or use if I can help you. And I want y'all to be successful with this. It's something that not everybody reaches out to or explains, or it's hard to find help with this sort of stuff at times. That take advantage of it. This is a great community. The B4 community is excellent at just making sure that they help each other and make sure that everybody has an understanding. And it's been a privilege to be a part of it here. And if there's no further questions, I'm gonna go ahead and close the discussion. I'm certainly happy to hear that, guys. And I said, don't be afraid to reach out. And not just if you're having trouble. I love seeing when you guys have success with this thing too, and with the B4. Post your success, show what you did that worked, so other traders can see it too. That it's that kind of stuff that helps people progress and develop their craft more, is when they see how people use things successfully. So, don't be afraid to put stuff up there, show how you utilize your trading toolkit. You never know how it might help somebody else. And in the interim, you might find that when you're describing it or showing it to somebody else, that you end up learning something yourself. So anyhow, guys, as always, seriously, it's a huge privilege and an honor to be here. And big thanks to Chuck and Barbaros. Thank you, guys. Y'all are fantastic. And thanks to the B4 community. Until next time, guys, y'all take care. Have a safe weekend.
Same to you, Chris. Thanks so much.